Okay, so this is not financial advice. This is for entertainment purposes only. Please read the description below. And today I am going to show you guys how to trade TGIF, ICT's Thank God It's Friday setup. And I'm going to show you the 2022 model again today because it's there every day. So, first, I didn't trade today. I did take the day off. I got another win in yesterday. I'll review that really quickly. Um, Same idea as from a few days ago. Generally, the first reversal on the 15 minute in the top middle chart here isn't going to be successful. So I believe I'm entering 10, excuse me, 1055. So that was here, right in this fair value gap, or gap rather. We should just call that a gap. So there's gap in here, a failed attempt to re reverse, which is just a pullback, where it goes beneath this bear bar and creates a swing high. We expect that's going to fail and get broken. Whoever tried to go short on this kind of lousy looking short is going to get stopped out. That's the idea. Okay, and that's what I was aiming for. It did get above that high. I was holding for higher prices. I was holding for the previous day's high, which it did got to. It, excuse me, it did get to, but in a high resistance fashion where there were a lot of 1 minute swings being taken out on the way up. So ultimately, what happened was I got stopped out at better than break even. I got a little like just under 2 points on that trade, and that was good enough for me. I'm up 6R on the week, so that was good for me, and that's why I didn't want to push it today on Friday. And one more thing to consider here, maybe one way I could have held for longer is using this initial stop and using the 5 minute to manage my trade below this swing. This is technically a swing low here in this bottom left chart here, but there's no like red bars involved here. There's no clear selling involved here, so that could maybe be seen as a higher time frame inefficiency, which probably wouldn't have been a good place to keep a stop loss. But this is an obvious swing. If I kept my stop below this initial swing here, I would have risked some negative drawdown on about a 1.5 hour trade, but it would have got up higher, it would have hit my target, and each time the market made a swing high, a new high on the day, the swing low before that high was not violated. So, for example, this there's two swings in this leg here on the 5 minute chart, but this first leg of the swing failed to make a high, right? The second one maybe made a high by a tick or two. So we would just keep, like, hypothetically, I'm not even doing this quite yet. I probably want to see it a little bit more, but before I totally change my trade management rules. But anyway, yeah, that's a point here. Keep it below the swing that made the new high, right? And trail it up until you can either take a partial. I was trading with one contract, so I can't take partials comfortably for my trading style. So I like to take a profit-taking stop. Okay, so that was yesterday's trade. Moving on to today, I'll show you the trade that I missed today. It's the 2022 model, which is basically here every single day. really didn't believe ICT when he first said that, but as you get better at knowing what to look for, these things become much more apparent. So today we had this sell off at the the 130 high of the day, and a lot of people would see that as a TGIF setup, or basically a reversal where the weekly candle wants to not close on its absolute high or absolute low, so you're expecting some measure of retracement to close the week. People were Traders were seeing this as a TGI setup, and maybe it was. I wasn't seeing it that way because if you look up at the 15 minute, the market is still in long bias mode, right? So this is a last swing before making a new high, and it was never reversed. So when you see this, this isn't these two big candles. It looks like a lot on the 1 minute, but on the 15 minute, that's just a pullback, and it's an opportunity to buy and discount, which is pulling back into the morning session high. And then you have this tiny, tiny little fair value gap that comes down into and just touches, just gets a little bit below it and touches yesterday's settlement price. Trades past it by maybe one tick just to fill any orders at that settlement price. And then you get a break above this bull bar, which could be considered maybe an order block. But this is also a swing here, this bar. I'm not sure if this qualifies as an order block according to SMC, but what we also have, we have a break above this minor swing high. We have a gap in here. We're at the 2 o'clock macro that probes down into this inefficiency, keeps this low in place, right? This is usually a very volatile time, and you see that this gap, mixed with all this being a higher time frame pullback, a shift in market structure, a bounce off the settlement price, and just like a broader narrative. Because, without that narrative, this 201 candle can easily come and take out that low, but it didn't. There's a bigger narrative going on here. This is a setup. This is an entry for 2022 model, right? You're aiming for the high of the day. Draw the fib. If you're entering on a breakout, let's say above this bull bar or above this swing, on the close of this bar, once you see a gap in here, you're getting about a 3R trade, or maybe a 2.5R trade if you buy on the close of this bar once you see the gap left in there, right? And then if you're going to ride it up till terminus, you eventually would have gotten filled in the aftermarket hours, the electronic trading hours. The way I trade, would have been stopped out probably around here on a profit taking stop. So that would have been a better than 1 hour trade, right? If I bought at the high of this 159 candle, it would have been a little bit better than 1 hour. This gray line being the 1 hour if I had entered there. All right, and I think that pretty much sums it up. So TGIF, if you're going to trade TGIF for a reversal on the weekly time frame, this is what I recommend doing if you're a beginner. If you're a ICT, then you can maybe look at this and trade off of the you can use the 5 minute or the 1 minute and trade the 5 minute with the 15 second, or you can trade the 1 minute with the 5 second. I definitely don't recommend that for most people. I don't do that. I wouldn't do that. I'm not advising people to do that. Probably a bad idea for most people unless they know exactly what they're looking for. And that would have been your TGIF setup, which to me, today, that setup was really just a discount to be able to buy low and sell into higher prices. All right, so that's it for today. I hope you guys like this. I hope that anyone who might be watching this or have watched this video this far is gleaning something from it. If you learned anything from it, please leave a like, comment, share, subscribe. Let's get this information out to more people. Let's try and make these concepts easier for everybody. And with that said, good luck, good trading, and God bless.